Nasdaq didn't open for 27 minutes after it had been scheduled to open, and there were some technical glitches. Can you tell us what those glitches were and what happened?
Right. Well, good morning, guys. Nasdaq broke their silence yesterday. They hadn't said anything about this for 2 straight days, and finally let us talk to some of the executives yesterday. What happened was a situation arose that they hadn't tested for in the what the CEO Bob Greifeld called 100 tests that they had run, and what that was, because of the volume of trades coming into the IPO, the size of the deal. Basically, this created a situation that they hadn't.
Jacob, we're going to interrupt you quickly. I apologize. We're going to go just to the stock chart. We actually see that Facebook is indicating below the $38 offer price this morning. But thank you. You were saying that effectively what happened is some people were actually trying to cancel orders, right? But those orders were being ignored or not processed?
Well, the cancellations were interfering with the process that Nasdaq needs to run to match up the opening trade in the IPO stock, in this case, Facebook. Usually it takes them 3 milliseconds to do this because of the size of the offering and the interest. It took them 5. That 5 milliseconds instead of 3, the difference of 2 milliseconds, there allowed some cancellations to get in and interfere with the process. It put them into a loop where this opening cross, they call it, kept repeating, and they needed to resolve that, force it to start, and that's what took that half-hour period.
Jacob, to take the bigger picture now, as you said, Greifeld spoke to the media yesterday, tried to explain this. What does this mean now for Nasdaq, which, of course, had a reputation of being the market for tech companies?
Well, of course. I mean, it's a huge black eye. Greifeld yesterday said they were humbly embarrassed. The jury will be out, as to whether or not this impacts their listings franchise. Obviously, the eyes of the whole world upon them the other day. There's companies right now, you talk to Greifeld, you talk to Duncan Niederauer at the NYSE, they talk about the pipeline of IPOs coming. Facebook coming on was supposed to loosen that up a little bit. So, it's going to be a question that people think about when they look at the venues. Is the system going to be able to handle it? Is there going to be any kind of snafu? Because remember, this is the second major IPO snafu because of a technical issue in the last couple of months, and there's been some smaller ones alongside of those.
You're of course referring, I guess, to BATS Global Markets, yes?
That's right, yeah.
And tell me, one thing, another storyline that was happening here, of course, is underwriters, you mentioned in your article, were working very hard to keep the stock above the $38 offer price. Can you tell us they were just in the market buying a lot of shares?
Well, it's the role of the lead underwriter to act as what they call a stabilization agent in these cases, and that means that they use the over-allotment of shares, I believe it is, to if the offering price looks like it's going to fall below, or if the share price looks like it's going to fall below the offering price, they step in and keep it above that. This is a role that's played by the lead underwriter, but the question that we're going to have to watch here is whether or not the lead underwriter, in this case Morgan Stanley, whether they stay with it, or, if they're going to at some point just say, look, we've done our piece here and the market's got to have its say.